Hey, good morning, everybody. Joel, don't you put that voodoo on me. I don't make you smarter, man. You make you smarter. I just nag the hell out of you until you do what's right all the time. That's it. Good morning, everybody. Good morning. Hey, Lyle, I just wanted to talk to you about this one. And I like it. I like the trade. Don't get me wrong. Guys, just because I point stuff out doesn't mean that I'm not a fan of what you're doing. I want you to see exactly what you traded into when you took this at 81.05. You had momentum, right? Momentum for the win, Lyle. I love momentum for the win, always. But you're trading into support or resistance that's already held 3 times today. You're trading from support that's already held 3 times today. And I'm not saying that momentum isn't a winner, right? But momentum is easier to take advantage of when it's not directly into an area, when it's coming from an area. And at 81.05, you had 4 ticks to get to the resistance that hadn't shown a sign of breaking. And it had already just held right there. I like the little pullback. But and this is why I want you guys annotating your charts. Lyle, there's absolutely nothing wrong with your trade, but if you write on the chart, because the market's been range bound, because of the overwhelming momentum, because every chart was up and strong, I was willing to take this. And what it does is it keeps you from taking the exact same trade or what you think is the exact same trade right here, right? Because that's the exact same look right there. And it's the exact same look here, and it's the exact same look here, and that you happen to take the one that was victorious. And I hope that makes sense. And we can talk about it more when we talk about termination conditions. But it's momentum for the win, right? So I guess I just want you to get in the habit of saying to yourself, because of this level of momentum, I'm willing to take a chance here. Because you definitely took a chance. And it paid off. Where does your stop go from an 04 entry, right? You got to talk about it. Your stop has to be down here at 94. So you're risking $200. I'm assuming that was a 2 lot. Yep. So you're risking $200 into resistance that just held with 2 divergences and not quite from an area. So not beating it up at all, but what I want you to do, and this is for everybody, and especially you guys that are live now, start writing on your charts, right? Make sure that it's consistent. And Lyle, you pushed me into the perfect conversation today, and this is what I was talking with John about a lot this morning. Has anyone ever woken up super amped and dug themselves a hole, taking the trades that maybe aren't the best trades, right? Taking the trades that maybe aren't the highest probability trades, and then you pull your head out of your ass, and suddenly you can dig out of that hole and have a good day. So how do we eliminate digging the hole in the first place? And I think that we had a pretty good epiphany this morning. And Lyle, you're going to hate this picture. It's right on, but you didn't actually trade from support, I guess is what I'm saying. Right? What did you trade from? You trade from just 4 ticks below. Your support would have been all the way down here, 5, 6, 7 ticks lower at this time. If you had taken a pullback and gotten in at the mid band to get a running start, I love it. But you literally just kind of went right into it, right? Little fluctuation. So good morning, the sucking sound every day. But I think it's all about the chart read, and your chart read was good, and that's, I guess, where I'm going with this. Is you had that bottom of the range that pushed it, that gave overwhelming momentum, and you had all these advantages, which is why you're like, cool, let's do it. Let's go for it. Let's see what happens, right? I'll get in at 04, and then once it breaks above 09, I'll say if it gets back below '09, well, I'll jump ship, right? Let's give it a chance to run. So I like what you did. I guess what I'm doing is I'm just saying, let's talk about the annotations. Let's make sure that you can take the exact same trade every time it sets up, because that was a good one. And I wanted to show you guys just a little thing. Right on. I like it, Lyle, as long as you have a plan. Just remember, guys, it's an education room. So my job is to analyze, talk about advantages, identify disadvantages, and talk to you about what you're doing, especially if you're not talking to me about what you're doing, right? Otherwise, if there's no annotations, wouldn't it suck if I just went, hey, Lyle, nice trade, and then shut down? Bonk. Cool. So, guys, let's talk about news first. And I do this every day. Do I have any new faces in the room? Maybe, maybe not, not yet. No, people like to sleep in. I know you guys like to sleep in. John Novak was talking about maybe moving the room back to 9:30 to start, give you guys time to trade pre-market, bring more pictures to class. Guys, today is Wednesday, February 14th. If you have someone that you are in love with or is in love with you, might be a good day to get them flowers or some chocolate. It is Valentine's Day. And the only thing we really have going on is crude oil inventories at 10:30, guys. But every morning I come in and I check the forexfactory.com/calendar because it's important to me to make sure that I'm not trading into news. If you saw this high impact yesterday, it made the market go crazy. And tomorrow at 8:30 a.m., it's probably going to go crazy again because there's going to be huge emotional reactions to these high impact and medium impact newses. Newses, that's a word. So every morning I'm checking it out. Everything I talk about is coming from the tutorial section, guys, right here. If you click on the button, it brings you to the tutorial section, and this is really everything. I mean, this is the trade logic, right? Watch a video, check it out. Trigger lines, tops and bottoms, termination conditions, right? Getting into the market. Everything you need to come back to is right there to study. And then on that same token, if you go to Discord, on that screen that opens up when you get in and scroll down just a little bit, guys, there is, where'd it go? 101 Basics. Just the basic fundamentals of what we're doing. Trigger reading, once again, because trigger reading is important for everything that we do. So you've got a lot of resources to help you get to where you want to be. And then for me, guys, one of the most important things is simplicity. It's becoming a chart reader. And this is what we're going to do today. Is we're going to talk about 3 rules. And we're going to talk about a high probability trend trade. That is huge. And we talk about it for a reason, guys. One of the things that I believe I'm guilty of, and one of the things that I believe a lot of people are guilty of, is we're always looking for the trades. We're always looking for the entries. We're always looking to get into the market. And we're doing it at the expense of the chart read. Because the chart read should be why you get into a trade. The chart read should be the reason that you pull the trigger. And your chart read begins for new users. If you're brand new with me, or maybe you're looking for consistency, the chart read begins with speaking to yourself in terms of advantages every time you have a conversation with yourself, looking at the market, and just asking yourself, do I have momentum? Do I have a clear path? And do I have an entry area? And once again, guys, I've been trying to snap pictures today. Let me figure out where I started. I was looking. There we go. So my brother and I were talking this morning, and this is odds favorable, right? We're going to talk about that momentum, but we're also going to talk about termination conditions, and we're going to talk about whether or not we're there. So it's easy to get excited. I have strong triggers. I'm going to look for the trade. To have an incomplete read. But guys, if you talk about, I have momentum, but I also need nothing in the way, and then I'll look for my entry area, well, then you can just embrace that. Strong triggers, pull back, right? But you've got to have the recipe. So you've got to talk to yourself in terms of advantages. And the first and easiest way to do that is with the high probability trend trade. This is the core of what we teach. Everything is strong triggers, take a pullback. That's really what it is. This is a trade where each indicator on every chart agrees for the trade. And I'm going to go to the glossary of common terms, and I want you guys to understand this is your highest chance of success as a brand new user. This is the best of the best. This is a trade where each indicator on every chart agrees for the rules for the trade. I start every classroom with this trade, teaching the rules for this trade, because this is the trade that has you speaking to yourself in terms of advantages. And this is a trade that typically wins 70 to 80% of the time when you follow the rules. And this is a trade, most importantly, that teaches you to read your charts, that turns you into a chart reader. So you can allow your chart reading to get you into a trade rather than your gut and your emotion and your desire to make money. Money is a process, or it's a result of the process. And chart reading is going to play a pivotal role. Guys, 90% of your day, you're just going to read your charts. 90% of the day, you're going to wait for advantages. 90% of the day, you're going to have to tell yourself, hey, my rules aren't met yet. It's cool if I sit on my hands and do nothing. And that's the hardest thing you'll ever do as a day trader. But once you study this trade just a little bit, once you learn these three simple advantages, you're going to understand where the market is likely to continue. You're going to be able to use that point for entry for a high probability trend trade. Ultimately, you'll be able to use that point for momentum trades. You'll be able to use that point for HVA trades. But understanding where the market is likely to continue is a byproduct of the study that you put into the high probability trend trade. Understanding where the market is likely to go, again, it's a byproduct of understanding momentum in areas, which is taught heavily in the high probability trend trade. And when you know where the market is likely to go, guys, it gives you the opportunity to get paid at that area. It creates a management plan for you. And then finally, you're going to understand where the market is likely to stop. And these are what we call termination conditions. And termination conditions can stop a market, can reverse the market, can make the market change direction, or just kind of instill a huge fight that nobody wants to be in. And if you look at NASDAQ this morning, we went directly into a Fibonacci area and nobody went short because you knew that the path wasn't clear. And then we went directly into Fibonacci resistance and nobody went long because we knew the path wasn't clear. And then we get another termination condition and another termination condition. And yet again, we still don't have a clear path, and we're seeing these challenges. And if all you do is speak to yourself in terms of momentum, a clear path, at an entry area, you get to make the decision to either lose money, risk money that shouldn't be risked, or sit on your hands and do nothing. And that's kind of what we're going to do today, guys, is we're going to learn how to be patient and wait for the best of the best, because let's be honest, your money is worth it. Your investment is worth it. Let's talk about advantages and let's make sure that we have them. So, three simple rules, guys. Each rule is designed to give you an advantage. These advantages are what you should say out loud every time you look at your chart. I have the advantage of momentum. I have the advantage of a clear path. I have the advantage of an entry area. If you can't say that to yourself truthfully, well, then you don't have a trade, because that is the recipe for a trade for the brand new users. This is the one that keeps you focused. These three rules come about on only two charts, guys. Simplicity has got to be your main goal in the beginning. Don't give yourself too much to think about. There are more charts that can be added. There are higher time frames. There are different patterns. But this high probability trend trade, turning you into a chart reader, is really the direction you should go first. And your large chart will define direction, momentum, and areas. And it's a slow moving chart, guys. And you're going to use one bar on the large chart to help you define these things. You're going to use the most current bar, and by the color of the background, you're going to understand which direction the market is moving. And by the look at the triggers, you're going to understand whether or not you have momentum from rule number one. And by using these key Fibonacci areas, you're going to know whether or not you have a clear path from rule number two. When you have these rules met, guys, we're going to take all of the action within one big bar and we're going to refine it on a smaller, faster chart. You're going to see it's kind of like an X-ray of the bar where you can see all the working parts, 15 to 30 bars, and you're going to use that one to understand and pinpoint where the market is likely to continue. That becomes your entry through rule number three. And guys, it's this little large chart, small chart. All it is big crowd, little crowd. It's the easiest way to think about it. If you're walking down the street in New York and there's 10,000 people walking against you, it's going to be difficult to get to where you're going, right? But if you turn around and walk with them, it's pretty smooth. And the market's no different, guys. The large crowd decides which direction the market is going. The large crowd decides whether or not there's momentum, and the large crowd decides and reacts to those key areas that you're going to know about. The small crowd is trying to fight it. They push against it, and they typically get a little shove. We rely on the small crowd to get us back to our entry point, because when you fight that big crowd, eventually you just get sick of it and you go with the flow. That's how we get to our entries. So we're going to use two charts, guys. Big chart, little chart. We're going to look for 3 rules, and that's the recipe for a trade. We're going to take the first hour of the day to learn the trigger line and Fibonacci rules for when it's okay to trade. We are going to discuss each advantage, and I want you to start discussing with yourself each advantage every time you look at the chart. You guys can simulate during class, after class, market replay. Go through and practice. Practice, practice, practice. Post your pictures in class until you're sure you have the correct rules. Why do we want the correct rules? Because the correct rules provide a statistical advantage. If you're going to risk $100, why not risk $100 with an advantage, right? If it's a coin toss and it's either heads or tails, guys, there is no advantage there. But if you weight one side of it, little piece of wax or something, put it on the head side, well, now statistically it's more likely to land on the heads side. So if you just always bet heads, even though it may hit tails every now and then, if you always bet heads, you're likely to come out a winner. And that's what this is, guys. The high probability trend trade is a trade that's been proven to win more than it loses. So we're going to learn it. We want you practicing the correct rules so you can always have that advantage. Don't want you practicing the wrong rules, because getting lucky is rarely a long-term endeavor. Getting lucky works on simulator very well. Getting lucky creates this short-term victory, but it's not at all a long-term success plan. And then we're going to simplify. We're going to talk about a high probability trend trade. That's our first talk, guys. We're going to talk about a high probability trend trade where everything on every chart agrees for the trade. You will have momentum, you'll have a clear path, and you'll have an entry area as dictated by the rules. We're also going to introduce you to what's called a medium probability trade. And when you have a medium probability trade, most of your indicators line up for a trade. However, a small issue exists. The one that we're going to talk about is going to remove your clear path. A medium probability trade is not a trade that wins 70 to 80% of the time. A medium probability trade has problems, which means that you have to manage it a little more aggressively, that you have to get profits quickly. You have to get to a zero loss level as fast as you can. Your ability to read charts that you're going to learn in this high probability trend trade is not only going to have you identifying the issue, and I love this little slide chart, but it's going to have you making sure that you don't sacrifice the other two advantages. And a medium probability trade just means that one of these advantages is gone, so you need to be a chart reader. If it's momentum, you'll be able to insist on a clear path and an entry area. If it's an entry area, you'll be able to insist on momentum and a clear path. And you'll have a very, very clear understanding of exactly what it means to have those advantages. I'm going to put that back at the front so it doesn't get lost. The idea is that you're going to commit to a look, right? And Lyle, this is why I kind of went off on a tangent this morning. You have to know the look so that you can commit it. It has to be repeatable. It has to be testable. You should be able to go back and take a picture of everything that you do and find 50, 60 advantages. Like find the same look over and over and make sure that it wins more than it loses. And we do that in 2 ways, guys. The first way is taking pictures. Taking pictures. Everything you see, take a picture. We did it yesterday a lot. As you're learning momentum, take pictures of momentum. As you're learning termination conditions, take pictures of termination conditions. Annotate the chart. Make sure that you know what it is you're looking at. And if you take a trade, this is so important for the classroom setting. Tell me why you did what you did, right? There are no wrong answers. Lyle explained everything that he did via text, but if he just wrote it on the chart, now he can go back and take a look at it and study it. So tell me why you did what you did. Explain the advantages that are present. Tell me what made you want to take that long trade. What made you wanted to take it from where you took it. And I'm going to look at your entries and we're going to have a conversation. We're going to talk about your chart read. Could you have done it a little better? We're going to talk about your entries. Could it have been lower risk? Could it have been higher profit potential? And we'll also talk about your exits. Did you hold for too long? Did you get out appropriately? Are you reading the indicators during the management process? So the more information that you guys give me, the better my feedback will be, I promise. I can read your charts, but I want to make sure that you can read your charts. So take a lot of pictures, guys, and don't limit yourself to only taking pictures of your trades. Take pictures of everything that you see. And then use your spreadsheet. Nexgen gave you a spreadsheet. Mine's right here. Mine is up here in the classroom. I'll give you a copy of mine so you don't have to go search it, but it is in the Nexgen Study Picks folder. And guys, there's 3 tabs. The first tab is your trade journal. Every time you take a trade, you're going to put a picture. You're going to talk about how you felt. There's little drop-down menus. How did you feel? Or how were the tops and bottoms? Were they strong? Were they weak? Were you unknown? Unsure? Did you feel confident, relaxed, nervous, jumpy, frustrated, bored? Guys, this is important to write down. What did your small chart look like? How did it go? And then there's a notes section that lets you take the feedback that you receive in class and put it over there. So maybe you take a trade and you think it's the best trade in the world and you just get your butt handed to you. And then when you present it in the room with why you took it, we have a great conversation about how you traded directly in determination conditions. Over here in the notes, you should put traded in determination condition. And then every morning, study what you did yesterday, guys. Study the trades that you took yesterday and say to yourself what worked and what didn't work, what felt easy, what kept you relaxed, and what made you nervous or feel forced. You'll find that your emotions are directly tied to your ability to follow rules, to have advantages. You'll find that what works are patterns that repeat themselves over and over. Whether it is in futures or stocks, or whether it's in your options, what you're going to find is that these patterns happen over and over. So what worked is probably the best pattern. What didn't work is going to be abandoning those advantages. You've got to know what things look like. So you're also going to use your spreadsheet. The second tab is where you're going to build your trading plan. Every time you have a statistical advantage, take a picture, drop it in there, begin to build a plan, commit it to recognition through repetition. And then the final tab is, guys, this is my tab. This is where I did a lot of work for you guys. There's about 300 pictures of you guys using the software. I would say most of these have been annotated. Maybe some of them haven't. But that's a high probability trend trade long. That is a clear path with momentum and an entry inside of favorable large triggers. Guys, this is the best of the best. You can go through and look at it, see the annotation, understand that that is in fact the trade that you want to take. Steal some of these, put them in your plan, write the rules on it. But the key is, guys, write your rules on your chart. This is what I'm looking for. This is what I had. Was it actually the best of the best trade? And you just got to learn the looks so they become easy. 15 pictures a day, guys. 15 pictures a day puts you at 300 pictures a month. This is a marathon, right? You're going to be here for the next 6 months. How easy, how slow is the market going to appear after 1,800 pictures? Guys, I personally have about 10,000 pictures. My brother is probably in the 30,000 picture range. There's a reason we read charts instantaneously, because we've been taking these pictures. We've been annotating these charts. I typically take 15 to 20 pictures before I ever get to this classroom. There is a recipe for success. So let's talk about high probability trend trades, guys. And it all revolves around when you have momentum, buy a pullback. When you have momentum, sell a pullback. And that's really the basic recipe. This is the NASDAQ. When you have momentum, buy a pullback. When you have momentum, buy a pullback, over and over and over. So what we're going to do, when you have momentum, sell a pullback. So we need to first identify momentum. And momentum happens through strong trigger lines. And strong trigger lines are probably one of the easiest lessons you're going to get. Strong trigger lines simply mean And I'm going to pull up this plan real quick. I wrote this the other day for you guys. Strong trigger lines simply mean, let me open this up, that there is a separation between small triggers and the large triggers. So when the background is red, the market's going down. And when the market's going down, you're going to look for odds favorable momentum, strong trigger lines to the downside. It looks exactly like this. Smalls and large are both wide. They're angled in that direction. There's space between the two. When the background is green, the market's going up. You're looking for the strong triggers going up. Smalls are up, large are up. They're both wide. There's space between the two. Guys, this is the easiest look ever. And you're going to see it on the most current bar. But small triggers break away from the large. Space is created between the two. This is your strong trigger look, guys. This is the absolute best of the best. This is what initiates looking for a pullback. And let me show you how easy it is. Guys, this is the NASDAQ. The background is red, therefore the market is going down. And since the market is going down, I'm looking for separation between the small and the large. Guys, I have strong triggers. I have odds favorable momentum. I have the absolute best of the best look of advantage. This is a market that's likely to go down. Can you give me a Y in the room if you see it? This is the first piece of the puzzle, guys. Most current bar says absolutely, this market is going down. Let's go to another market, see if it's consistent. My small triggers are up in green, but my large triggers are down. Do you see how the colors don't match? The direction don't match? This is not odds favorable momentum, guys. This is not the best look. And then on the S&P, poor little S&P's been stuck, but the smalls are below the large, and the large are starting to get wide, and the space is there. And this market has just been grinding down, following momentum. And that's how easy it is, how easy it can be to determine when the momentum is down. But that's only the first piece of the puzzle, right? That's the first part of the equation. Strong triggers push the market in the direction of the trend. Strong triggers create what we call odds favorable momentum. And when you have odds favorable momentum, it is a market that's likely to continue in the direction of the trend. The opposite of strong is weak. And weak triggers, when the smalls return inside of the large, guys, that can stop a market. That can create problems. The weakening of the large triggers means that anything can happen up or down. And I'm going to show you the life cycle through this picture. I'm a big fan of this picture. Strong triggers, odds favorable momentum for short trades is best. With both triggers down, when one trigger of the two small triggers is inside of the large triggers, this is the first sign that momentum is slowing. Short trades can still be taken if the other charts agree. And then with both triggers down, once both of the small triggers are inside of the large triggers, you have a weakening, a slowing of the trend. Anything can happen is the term that you're going to hear in class, guys. You're going to hear anything can happen a lot. Short trades may still be taken, but must be managed well because the momentum is no longer present. And then weak triggers into an area may stop the market. And we're going to talk about that right now. That's that clear path. But guys, it's going to go from strong to weaker to weakest to potentially reversal. And that's the life cycle. That's exactly what you're going to see. Strong to weaker to weakest. There's your reversal. And once you begin to accept that strong triggers are the best time to buy a pullback, strong triggers are the best time to sell a pullback, it keeps you focused on having that advantage every time you take a trade. Strong triggers, the market continues down. Weakening, it continues down. Weak, there's the reversal. 90% of your day is waiting for the advantages, guys. From the reversal, strong triggers, buy a pullback. You'll see the pullback on the large chart is one tail. On the small chart, it's at 15 to 30 bars. You're going to pinpoint where that tail is most likely to form. Strong triggers continue up. Weak triggers, there's a reversal. Strong triggers, sell a pullback. All the way down, probably to an area here. And then indecision, colors that don't match, stay out of the market, sit on your hands. Wait a minute. This is where buyers and sellers are fighting, and then eventually you get the momentum again. Guys, rule number one is the best advantage. Rule number one, and Lyle showed us earlier, rule number one can break areas when you have those strong triggers. Rule number one creates a market that's likely to continue in the direction of the trend. Strong triggers buy a pullback. Weak triggers sit on your hands. Is everybody cool with that? That's rule number one, guys. That's the advantage of momentum. It's dictated on the large chart. So with only one rule, two trigger lines, we've decided on the direction as well as the momentum. So now we're going to identify areas. Now we're going to make sure that we're not trading into areas that may stop the market. Termination conditions have to be false. Room to profit targets are true. The areas that may stop the market, guys, are going to be fibs, whether it is Fibonacci resistance or Fibonacci support. It's also going to be those yellow 1-to-1 dots. And it can be a divergence high or a divergence low. And I want to talk about divergence real quick, guys. When the market pushes down, when the sellers are in control, if a pivot is formed, meaning that the market goes from down to up and the buyers steal their momentum, you're going to see the cyan line. You're going to see this negative number. And guys, the negative number doesn't mean anything. It's just a byproduct of the equation. But divergence is a loss of momentum. That's all it is. You see this cyan line print about 3 bars up. You see this magenta line from a high print about 3 bars down. This loss of momentum becomes a line in the sand. And when the market gets back to it, it may reverse. It may stop. It may fight. So we're going to use the divergence lows as areas as well. Let me give you this one. This is a nice roadmap. And the recipe for termination conditions is pretty simple, guys. And we're going to go through it. And we're going to go through it straight from the user guide. If price reaches a Fibonacci area, whether it is support or resistance, when price reaches that area, what it does is it sets off the decision-making process by the people that are in charge. And if price reaches the area, let's see if we can find one right here. Termination at a low. It's the same picture we use for momentum. If price reaches that area and the triggers remain above, well, this is an area that's likely to stop the market. This is an area that may create a bounce. This is an area that says no more short trades into the area. Guys, termination conditions mean that price has reached the area and the triggers haven't broken. At a high, it looks like this. Price reaches the area, even with momentum. If the triggers remain below, guys, no more long trades into this area. It's a very simple recipe to understand whether or not an area has broken or not. Price reaches, triggers below, no more trades into the area. The market may reverse at Fibonacci areas, even though both triggers are widened up with odds favorable momentum. So you have to always combine Fibonacci area location reading with the trigger line strength reading. So you start with momentum and then you incorporate areas. The small triggers will always be the first to cross off of an area. And that's what we're looking for, guys. When those small triggers cross, the area is even more likely to hold. Then when they get below, create odds favorable, we'll look for an opportunity. But termination conditions are going to happen all day, guys. You're going to see price reach support. If the triggers remain above, just don't take any more small chart shorts, not into the area. If price creates a divergence low through a loss of momentum, it's not a termination, but when price reaches that divergence low, guys, this is such a key concept. Price reaches the area, and this is the catalyst. This is what says, hey, let's make a decision. This is what we call a pivot stop out. You're going to see pivot stop outs all day long. This is not a pivot stop out because of divergence. This is just a pivot with a loss of momentum. When price reaches the area, the triggers remain above. Now it's a termination condition. Now it's a pivot stop out. If this termination condition reverses the market, guys, this is a strong bottom. And a strong bottom is the precursor for the highest probability trend trade that you can take. These pivot stop outs happen at highs as well. And when they correspond with resistance, guys, or support, it becomes even more powerful. And I want you to see this. Strong triggers into the area. None of them break. No long trades. Thank goodness we didn't, because it pushes all the way back to support. When I reach support, the triggers are above. No short trades. 90% of your day is spent waiting for the advantages, guys. Back into resistance 2 times and a divergence high. We have a pivot stop out at resistance. This is a good look as a termination. Notice that your triggers are now weak coming into the area. Doesn't this look like this one? Patterns repeat themselves. If this termination reverses the market, it's a strong top. If it provides you odds favorable momentum, separation, and price doesn't reach the next key area, clear path, there's your little pullback, guys. That's your entry for the highest probability trend trade that you can take. It's what you don't do when there's nothing to do that allows you to capitalize when you have the advantages. So you have to speak to yourself in these terms of advantages every time you look at the market. The sellers are in control. They're pushing. They obliterate this area, and they make it to these 1-to-1s. Good morning, Miss Debbie. When price reaches the 1-to-1s, you guys are all asking yourself where the triggers are. They remain above. Therefore, there is no short trade, and it keeps you safe. And then it pushes into resistance, and none of you go long because the triggers are below. And you see the fight, guys. You see the fight between buyers and sellers, the absence of momentum, no clear path. And you sit on your hands and you do nothing, and you remind yourself that 90% of your day is going to be spent waiting for advantages. Well, if I can't go short into this and I can't go long into that, guys, when is the path clear? When is it okay to take the trades? Well, I'm going to show you. When both the small and the large get below the area is broken. Look for your entry. When both the small and the large get above the area is broken. Look for your entry. Small and large triggers break through the area is broken. Look for your entry. The path is clear. And you see it on this one. Eventually in the fight, small and large get above resistance. Resistance behaves as support. Smalls are outside of the large. Guys, there's your pullback. Not losing any money here results in the highest probability trend trades you can take to get you to the next areas. And guys, termination conditions are a part of life. Termination conditions are going to show up every day. Termination conditions, price reaches resistance, triggers don't break. Don't go long. Price reaches support. Small and large don't break. Don't go short. Look at how often this happens, especially when there's a lot of indecision in the market, guys. Rules 1 and 2 are going to keep you out of these fights. Rules 1 and 2 are going to keep you from hoping support breaks without momentum, from hoping support breaks with all the triggers above. And guys, sure enough, there's the bounce. But it's right into resistance. So rule number 2 will help you also identify a market that's struggling to get out of a range. Let it be easy, guys. Let it be safe. So there's 3 options as you approach an area. Let me open this picture. If you reach the area of resistance and the triggers don't break it, the area is not broken, there is no clear path, rule number 2 is not met, it's okay to do nothing. Let's wait and see what the reaction is. If your small triggers get at least 2 points above the area, smash through the area, and you have odds favorable momentum, the area has the potential to break, but it's not a clear path because the small and the large have not gotten to the other side of the area. Nice job, J. Roth. Large chart leads the way every time. So guys, this is no trade. This is high probability trade off to the right. This is going to be your first medium probability trade. This is that area with the potential to break, but since the large triggers aren't above it, it's not a clear path. So if we go back to that cool little slide chart, you can insist on momentum in an entry area because that clear path is no longer present. You have given up 33% of your advantages. Don't make it 66. And guys, that's termination conditions in a nutshell. These lines are where decisions are made. These lines are where the large crowd are reacting. So the large chart defines direction, momentum, and areas. 2/3 of the work is done on the large chart. The large chart should lead the way. Put that on a coffee cup, right? Termination, termination. Look, the termination broke. There's a momentum style trade. Kind of a nice one. I bet you my brother took that one in the pros room. Sometimes the market turns from nowhere, guys. Sometimes it looks like it's going to go down, and then it just goes up. And sometimes the market looks like it's going up, and it has all the strength in the world, and it just goes down. And this is that large chart, that slow chart, that broad stroke of a brush. There's one more termination condition that we are going to look at. The large chart defined areas, guys. The large chart defined Fibonacci support, resistance, yellow 1-to-1s, divergence lines. And now we're going to let the small chart give us a termination condition. The only termination condition that I give any respect on a small chart, and that's going to be 3 of those divergences in the same area. 3 divergences in the same price range may terminate a trend. It's not guaranteed to terminate a trend, but it may terminate the trend. It may create a push that makes your short trade untradeable, or a push that makes your long trade untradeable. It may tell you if you're in the perfect short, 3 divergences says get out of that perfect short, things are changing. So we're looking at the small chart once the rules are met on the large chart, right? Once I have odds favorable momentum on the large chart, once I have a clear path on the large chart, I'm going to turn my attention to the small chart to look for an entry anyway. Well, if I look at my small chart and there's 3 divergences in the same price range, rule number 2 isn't met. I'm no longer looking for an entry. Guys, you're going to see these and they're powerful. You're going to see them with small triggers inside of the large. They become more powerful. You're going to see them with a head and shoulders where your third pivot is higher than the previous or lower than the previous from a high. Even more powerful. This should be enough to keep you out of a short trade. This should be enough to keep you out of a long trade. Guys, 3 is the magic number. 3 is the number. When I have odds favorable momentum, when I have a clear path, 2 divergences don't scare me. 1 divergence doesn't scare me, but 3 divergences will be enough to keep me out of that next trade. And guys, that is rule number 2 in a nutshell. Speaking to yourself in terms of advantages. So I'm reading my large chart. Let's go read one. I'm looking at my large chart and the trend is down. And I'm looking at my large chart and my small triggers are below the large triggers. I have momentum. And I'm looking at my large chart and now I'm saying, where are my trigger lines in relationship to this divergence low? Well, now my small and large are below the divergence low. My path is clear. I'm speaking to myself in terms of advantages. My large chart says up, and my large chart says that I have momentum, but my large chart has reached resistance and my trigger lines have remained below. Even though it's up and I have momentum, I don't have a clear path yet. I'm speaking to myself in terms of advantages every time I look at the market. I have momentum. I don't have a clear path because my small are through the area, but my large are not. I'm at least 2 points beyond the area, which means that if my rules are met for entry, I can look for a pullback on my smaller, faster chart to get me into the market. Does that make sense, everybody? What we did is we just did the large chart read, and now we'll use the small chart to refine where the market is most likely to continue, and should it give us an opportunity, well, then we'll take it. And we're going to do that with the small chart, with the fast chart, with the refinement chart. Large chart says up. Guys, I want you to look at the large chart here, most current bar. Large chart says up, it's green. Large chart says momentum, and I know that momentum is the reason I look for a trade, and I haven't reached my next area, which means that I have room to get there. And my small and large are above that resistance. It's now support. It means that I have a clear path. Guys, it's time to look for an entry. When the large chart leads the way, when the large chart says go, when the large chart says it's time to look for a trade, I'm going to go to my smaller, faster chart. And guys, this entry sequence that we're going to look at is on the spreadsheet that I gave you in the room. Large chart says go. The large crowd says that we're going down. They say that we have a clear path. The large crowd wants this market to go down. There's nothing in the way. Well, there's going to be yahoos over here that want to fight it, guys with just enough money to create a shove, right? And we're going to let them create that shove. Small chart rules say, I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. I'm going to use a limit order. I'm literally going to wait for the market to come to me. And I'm going to use it to buy or sell a pullback. Guys, the pullback is that little push that the small crowd gives. That little retracement counter to the underlying trend. And I'm going to make that pullback come to an area. Fibs, mid bands, yellow 1-to-1s. But here's the thing. Those areas have got to be inside of triggers. Inside of triggers, guys. And there's two looks on triggers. I want an area inside of triggers. Whoops. I want an area inside of triggers, whether it's a mid band, a fib, a yellow 1-to-1. Woo. But if I let my large triggers and my synthetic triggers be one on top of the other, if I let my large triggers and my synthetic triggers overlap like two snakes riding piggyback, well, then I've got the smallest possible room ever for those areas to end up. If my small trigger, or if my large triggers and my synthetic triggers are split, if they are with distance between the two, I don't know if it's going to go from here or here, guys. Price loves to correct to these moving averages. Price loves to come back to the triggers. If there's a gap, I don't know which trigger it's going to go to. If they're tight, I've decreased the area where it's most likely to continue. And when I put an area, fib, midband, or yellow 1-to-1 inside of those triggers, I give the market something to bounce off of, guys. And this is your recipe for success on rule number 3. I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, which means when the large chart says go, I need a pullback. And it begins with a reversal bar. And this reversal bar says the small crowd wants to do their thing. The small crowd is ready to push against the large crowd. So at the time of the reversal bar, the first thing I do is I look for my triggers, large and synthetic. Synthetic is a fancy way of saying from a different time frame. Your synthetic triggers are nothing more than the large triggers from the large chart. But when they work together, they can create the smallest window possible. So I'm going to look at my triggers. And the range goes from the lowest line to the highest line. Whether it is large or synthetic, it doesn't matter. From the highest trigger line to the lowest trigger line, it's inside of that area that I'm going to look for fibs, midbands, or yellow 1-to-1s. Because this gives the market something to bounce off of. Fibonacci resistance, yellow 1-to-1s, magenta midband for a short trade. And then the area where the market is most likely to continue extends from the lowest point of resistance inside of favorable large triggers to the highest point of resistance, the midband, inside of favorable large triggers. Once I've identified that range, I'm going to put a limit order right there at the lowest point of resistance, because remember, the large crowd is screaming to the downside with nothing in the way. I don't expect that small crowd to give me a big push. So I'm going to get in just below the lowest point of resistance. And guys, this is your entry for the highest probability trend trade. This is the best of the best. This is the trade that typically wins 70 to 80% of the time. This is the trade that creates confidence through the memory of success. This is the trade that turns you into a chart reader. And it also prepares you for management. Because if I get into the market where the market is most likely to continue, well, then I also know where the market shouldn't go. The market shouldn't go beyond this window of opportunity if this is going to be a trade that works, which means I'm going to put a stop 4 or 5 ticks above that highest point of resistance where the market shouldn't go. And guys, if the market goes past my limit order, I'm in the trade, or hits my limit order, I'm in the trade. If it hits the second level of resistance, I'm in a trade. The third level of resistance, I'm in a trade. All of my rules are intact, even the mid band. I'm in a trade. I'm in that area where the market is likely to continue. But if it blows past it, gets outside of the triggers, exceeds the areas, guys, I don't want to be in that trade anymore. I've lost my advantage. And this is where you have to remind yourself, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Guys, this is the cost of doing business. This is the market being wrong. This is just a normal part of a positive equity curve. But because we know where the market is most likely to continue, we also know where it shouldn't go, and it allows us to put our stop in the correct spot to protect ourselves, but not put it arbitrarily a couple ticks above because we're afraid to lose money. Guys, you've got to step into the kill zone if you want to be successful as a day trader. Everything says up, so I'm going to look to my small chart. I have momentum. I have a clear path. I'm going to look to my small chart, and I'm going to wait for the small crowd to do their thing, and it begins with a reversal bar. And once they give me the reversal bar, let's find our triggers. From the highest line to the lowest line, I'm looking for something to bounce. And once I define the triggers, guys, let's define the areas. From the highest point of support, that mid-band, to the lowest point of support, these yellow 1-to-1s. It's inside of this black box where if the market is going to go with the large crowd, I anticipate it to go from. So all I have to do is drop a limit order right at the top of the window, guys, right here at 59. And if the market comes back, well, then I'm in a long trade. I'm in a long trade with the advantage of momentum. I'm in a long trade with the advantage of a clear path. I'm in a long trade with an entry area. And guys, this is the best of the best. And I'm not worried about the result as a brand new user. What I'm worried about is identifying the best of the best. I'm worried about identifying the area where the market is most likely to continue, because that's where my statistical advantage lies. You can study this by using the two charts in a market that is not moving. And let me stress this a little bit. It's easier to find it when the market isn't moving than it is when the market is moving, which is why we take pictures. But if I have momentum and a clear path, and I circle the tail, remember we don't trade the tails, but it lines up with support inside of favorable large triggers, guys, I've got the best of the best here. I want to make sure that I can identify this every time it sets up, and you do that historically. So let's go back a little bit. Let's get off the S&P and we'll see if we can find one that's been moving a little more. Guys, I'm going to circle this tail with all the momentum. Notice that it corrected to the synthetic triggers and blew right through the large. This is why when they're one on top of the other, it creates an advantage. And there was a mid-band sitting in the middle. Guys, this just isn't my trade. That's not the best of the best. And if I back it up and I circle another tail with all that momentum, all we're doing is looking to see if the rules were met. Let's go back. Pulls right back to resistance inside of favorable large triggers. It gives me a second resistance right inside of those triggers. And this is the NASDAQ. There's a little overrun. And ultimately it continues down. And guys, all you have to do is go back and don't worry about the termination conditions yet. If you see momentum, circle a tail. You're starting to study, and all you're doing is you're learning to respect the idea that pullbacks are where we get in. When it's strong, we look for a pullback. Is everybody good with this? So one of the drills that I gave somebody yesterday is go back, and every time you have odds favorable momentum, circle a tail. Don't even worry about your clear path yet. Let's develop trust and momentum. And where was that? That was 8:26 yesterday, I guess. Or maybe this morning. So if I scroll back and scroll back and scroll back, it pulls right back to resistance inside of favorable large triggers once again. So we're developing trust and momentum. We're developing trust and pullbacks. And then notice that the large triggers never got below the yellow 1-to-1s. This is where you'll start to couple it with that clear path. Get accustomed to the idea that strong triggers push things down, right? Get accustomed to the idea that you can sell a pullback when they do. And then you'll slowly add in if both of my triggers don't break, this can happen. If my triggers don't break, that can happen. If my large triggers don't get below, this can happen. Is everybody following me on the simple little idea? So now, because of it, you notice there wasn't a pullback, there wasn't a trade to be had. And since triggers hit support, even with momentum, I might not be looking for that short trade over here at the area inside of favorable large triggers, because now my path isn't clear. Guys, give me a Y if you see it. This is the NASDAQ kind of putting on a little lesson here. And it may go down, right? But it's okay to say that's not my trade, because price reached support and none of the triggers broke. And I'm kind of hoping that they fight back and push up here just to give us a good lesson. But every now and then they won't. This much momentum may push, but our path isn't clear. If you take a trade, you got to manage assertively. Guys, this is what we talk about every day. We talk about these simple advantages, and I want you to speak to yourself in terms of advantages. So let's do it one more time. Everything's set up. Momentum was waning. We didn't really get through the area. And guys, look, it worked. That's the market encouraging you to break your rules. Smalls are down, large are up. Notice that it never broke down here, and that gave us the big shove. Decisions are being made there, guys. So this is my first hour. This is what I talk about every hour. I want you guys to start talking to yourself in terms of advantages. Every time you look at a trade, I want you to talk to yourself in terms of advantages, and I want you to simply say to yourself, did I have a termination that reversed the market? If I did, it's a strong bottom. If I did, it's a strong top. There's pictures of both so that you can study. Did I have strong triggers on the large chart? Guys, there's that reminder. What's it look like to have strong triggers? That's it. Perfect. You know exactly what it looks like. Check yes. Rob, what does it take for an area to break? And I think this is why we have to write verbiage on the charts, guys. Small and large triggers must get past the line. Okay? So, Rob, that's your recipe for termination conditions. Small and large triggers must get past the line. Did the small and large get past the line? There's your small. There's your large. Nope. Not a clear path. Small and large don't get past. Small and large don't get past. See how the small and the large did get past the line here? Resistance began to behave as support, but that lack of momentum pushed you all the way back to support. And guys, this is a very key pattern. A strong top is a termination that comes from a key area. This is not a strong top. This is just a loss of momentum. And it pushes all the way back to support where no triggers break. And then the buyers take back over and push it to the key area. Strong triggers into it, pushes down. We get a retest, weak triggers in. That's what gives us the bigger shove down. But until both triggers get through the area, Rob, the area is not broken. That was a huge run up. Smalls and large got through, but notice that there's no momentum. Guys, this is a key look. There is no momentum, but there is a key path. And look at the push up that comes after. There isn't momentum, but there is a clear path. But look at the push up. There is momentum, and the market pushes down. There is momentum, and it still pushes. And there is momentum and the market pushes up. We lose the momentum and it pulls right back to support and then continues the move. So you can go through, guys, and you can start looking at these. There's momentum and it pushes down. Momentum, momentum, momentum. Loss of momentum in an area, and I'll be damned, the market goes up. All you have to do is talk to yourself in terms of simplicity. I have strong triggers, sell a pullback. I have weakened triggers, let it be perfect. There's absolutely no momentum, and golly, look at the push back. It never has to be hard, ladies and gentlemen. It never has to be hard, but you have to be able to go back and look at these and talk to yourselves in terms of advantages. And we did some yesterday, right? And I gave at least one of you homework yesterday. But if I go back and take a picture of the large chart, price reached support, triggers remained above, no short trades. Price reached resistance, the triggers remain below, no more longs. So what you're doing is you're going back and you're taking these pictures and you're writing the exact verbiage of what it is. S&P, Joel. Smalls and large didn't break, right? Odds favorable momentum to the upside. I have a clear path up, don't I? Because I haven't reached the area and because all of my triggers are above the previous. Do you see it? And then guys, look at the split triggers. If you went long from the mid band, well, it corrected down to the synthetics. This is why having triggers one on top of the other is such an advantage. You didn't know where it was going to go to. And check this out, Joel. I want you to see this. Doesn't this picture look an awful lot like this picture? And this picture is 2022, guys. We're in 2024. Patterns repeat themselves. So Joel, when they're split, the market set up, right? The small chart said, I don't know which one it's going to come from. So, guys, I think there's a great pattern there. And that's all we're doing is we're recognizing patterns. So once again, if you have a termination that reverses the market, check yes. If you have strong triggers, check yes. If you have no termination conditions, check yes. And if you have an area for entry inside of favorable large triggers, check yes. Why do I put favorable large triggers on this high probability trend trade plan, guys? Because favorable large triggers creates an advantage. If you don't believe me, ask Joel. Favorable large triggers, when they trend one on top of the other, creates an advantage. Split triggers. Understood you failed? Why would you say you failed? You made a mistake. You had momentum and a clear path. You had area inside of a trigger. The only challenge was that it may have gone lower, right? And it did. So Joel, it's not a failure. And guys, stop beating the shit out of yourself. If I don't beat you up, you don't get to beat you up. Joel, your job is to say, I had odds favorable momentum. I had a clear path. That's it. When this trade doesn't work, this is your job as a day trader. I entered at area inside of triggers, which is awesome. Because triggers were split and price corrects to triggers, I am not sure which trigger it's going to. That's all it is, Joel. I don't even think it's a bad trade. It's a beautiful trade. You had lines, but if you're gonna take a shot on split triggers, if it goes below your areas, lose 2 or 3 ticks, right? Lose 2 or 3 ticks. Don't lose $240. Lose $100 because you know that it may go lower. So Joel, you put your stop below the lowest point of support inside of triggers, and your stop goes right here. And if it comes down and corrects to the synthetics, hell, get in on a reversal bar if you want. But do you see how understanding this pattern, I think it's a good trade. I think you took a great entry. I think you had momentum. I think you had a clear path. I think you had an area to bounce off of inside of triggers. How did you manage it? And the only thing that this annotation does is when you see this look, it allows you to formulate a management plan based on the look. Does that make sense? Because the triggers are split, with all the advantages here, I'll take it, but I'm not going to risk $300 on this trade. If the mid-band doesn't hold, well, then I know that I have to sit tight because the triggers are split. Guys, I hope that makes sense to everybody. But this is why I talk about favorable large triggers. Because when you have favorable large triggers, and Joel, thank you for this picture or for this lesson, because I think this lesson is outstanding. And when you hear a lesson enough, it goes through. When they're one on top of the other, guys, notice how there's that tiny little correction spot? That's kick-ass. That's what you want. And then when you put an area inside of them, that's what you want. I love it. I love the trade. Guys, you have to make mistakes. You have to make mistakes. If you're not making mistakes, you're not trying hard enough. So guys, this is the high probability trend trade plan. Let me make it a little smaller so you can see the whole thing. These are your advantages. These are pictures of your advantages. Here's your management for the high probability trend trade. When everything is perfect, guys, your initial stop is beyond where the market is likely to continue. You've identified it because of the entries inside of favorable large triggers, and you know where to put your stop, right? In a long trade, pictures of your management. If you get in at the area inside of favorable large triggers, your stop goes where the market shouldn't go. And if it gets hit, who cares? That's just a part of it, guys. It's a normal part of a positive equity curve. In a short trade, your stop will go where the market should not go. 4 or 5 ticks above that highest point of resistance. And if you get stopped out, who cares? You took the perfect trade. And then your first stop movement is going to be 2 ticks above or below the market, guys. If it doesn't hit your stop and it gives you a reversal bar up, you're 2 ticks below it. You've moved your stop behind the market, doing what the market is supposed to do. And then the other side of that is if it's a short, you're 2 ticks above the reversal bar because the market's already doing what it told you it's going to do, guys. This is very pragmatic. This is if-then. Your first contract goal is $200. And if you hit that goal, guys, you made $100, your stops break even, and you're holding for the second goal. And the second goal is $200. And if you hit the second goal, guys, it's a $300 trade. The management is pragmatic, if then. The entry is pragmatic, if then. If you just get good at this one trade, if you commit 30 days to getting into the market where the market is most likely to continue, congratulations, you're a chart reader. At the bottom of this, there's that checklist. Print this out, guys. Keep it on your desktop. Police yourself every time you take a trade. Every time you take a trade, you should be able to write these 4 rules with an arrow on your chart. I had a termination that reversed the market. I had strong triggers. I had no termination conditions. And I had an area for entry inside of favorable large triggers. I've never had anybody follow this plan and do worse than 70% ever in the history of the plan. This is the beginning for you guys. And then I'm going to give you a plan as well. The exact same plan, guys. This is the KISS trading plan. And this is a plan that is a stepping stone in your journey, guys. This is not the end of it. This one's designed to optimize your chances of success with a high probability trend trade in the 50-50 trade. Joel, it does get frustrating. But when do we lose? And guys, I'm telling you, this is true. I know this from my own experience. I lose when I'm more interested in the trade than I am the chart read. Does that make sense to everybody? Most people lose when they're more interested in the trade than they are the chart read. So Joel, if you had favorable large triggers, would you have taken that trade? Yes. So the flip side of that is, if I don't have favorable large triggers, is it okay if I'm not consistent? Is it okay if I'm not winning more than I'm losing? If it's okay that I know I am subject to trading my read, or trading my gut rather than, is it okay to commit to this no matter what happens? And I'm telling you guys, the hardest thing to do is to say not my trade, because the better you are a chart reader, and Joel, you're a perfect example of it, the better chart reader you are, and Joel, you're an amazing chart reader, you see this and you say to yourself, man, it couldn't make it. It's going up. It has momentum. Life is good. I just have to find my trade. And then you look over here and you say to yourself, whoa, I'm just not sure if it's going to go from here or here. And how do you get that, guys? You got to get your ass kicked on this one 50 times and get so sick of getting your ass kicked on this one that you stop taking it. And then the next step is saying, well, I know that it might go from here, and I know that it might go from here. So what I'm going to do is I'm going to do something clever. Let me find an arrow. I'm going to do something crazy. I'm going to say, since I don't know if it's going to be from above or below, I'm going to wait for a reversal bar in the direction of the trade, because then my risk is already established. And then it's already corrected down to where I expect it to correct to. And as long as I still look good over here, do you guys see how you can take advantage of split triggers? You can still find a trade. You can still trade the momentum and the clear path. But now what you've done is you've said, it's not perfect. I'm going to make it confirm. It's not perfect. I'm going to make it confirm. And it didn't confirm. It's not perfect. I'm going to make it confirm. It's not perfect. If I take it and I have to manage out, I'm going to make it confirm. And Joel, I make it sound easy because I'm looking at charts that aren't doing anything, right? I'm not looking at a market that's live. I'm not a brand new chart reader. I'm not emotional. I don't have any skin in the game. Guys, I have weak triggers. Everything says up. My path isn't clear. Do you see it? That's how quick the read went. I have weak triggers. My path isn't clear. So why the hell am I looking for an entry? Because I spoke to myself in terms of advantages. Isn't that cool? So let's go back to the neat slide chart. Guys, I'm telling you, print this out and put a box on it. I had weak triggers, so I didn't have the advantage of momentum. Small and large hadn't cleared the path, so I didn't have a clear path. Did I have an entry area? Wow, it was so pretty, wasn't it? Right inside of those triggers, but it's still lost. I wonder why. Guys, I'm telling you, it can be this easy. I promise you, it can be this easy. You have to allow it to be that easy. So this KISS trading plan is designed to keep it that easy. It's designed to keep you focused on the best of the best, guys. Your first 30 days with me, just focus on your entries. By following the rules, Joel. That's it. By following the rules. You know, my brother told me once, he goes, Mark, one day you're going to get so tired of losing that you're going to follow a plan. He was right. One day I got so tired of losing that I followed a plan. And you guys want to know the truth? Is I'm human just like the rest of you. And I will have a day where I go batshit crazy. And I break every rule that I have because all I'm looking for is the trade, not the read. That's my new phrase that I'm going to coin. So the read is momentum, strong triggers, no termination, area inside of favorable large triggers. That's the read. And when I have the read, I take the trade. Guys, this is designed to get you the best of the best. High probability and that 50-50 trade. That medium probability, not a clear path. Through simulation, study, class feedback, and continuous practice, you're going to create your own plan, guys. And your own plan is going to be it's going to meet your needs, and it's going to be based on your chart reading. So in the beginning, if that 50-50 trade continually kicks your butt, that's not your plan. Let your plan be simple. Let your management be simple. By reading charts, Joel. We're going to do that. Second hour, we're going to do that. I'm going to bug the hell out of you guys today. Define your entry. Don't fight the large chart. Let your management be pragmatic. Guys, this KISS plan is going to take you next level. This KISS plan is designed to optimize your chances of success until you're a chart reader. Then once you're a chart reader, you're going to start to create your own plan. But why on God's green earth would you abandon one that optimizes your chances of success? It's okay to stick with this for the rest of your life. You're going to get there, guys. I promise you're going to get there. I still don't have momentum or a clear path. These little fluctuations on the small chart doesn't mean that all my rules aren't true over here. I'm sitting on my hands and I'm waiting. All right, Joel, I want your fingers on the W or the N. Do I have odds favorable momentum? What do you think? Do I have odds favorable momentum, guys? Hell yeah. Small's below large. Joel, did I have a clear path? No. Didn't that just save me money? Isn't it crazy? Joel, you can do it, but once you get to not a clear path, you have to say, not my money. Don't look for a trade. Guys, I have traders that get rid of their small chart, and until the rules are met on the large chart, they don't even open it because they know that they'll talk themselves into a trade. Notice how your triggers are split? And this is the NASDAQ. It's a different animal. If you waited for a confirmation bar, at least you had a chance. One more read. Let's go look. Crude oil. Do I have momentum? There's separation, right? Do I have a clear path? No. I'm okay. I'm just not going to look. Does that make sense, everybody? I promise you, it can be that easy. Let it be about the read, not the trade. Let it be about your advantages, not what you hope happens. I had this epiphany this morning, guys. My brother and I sat and we watched the market, and we watched it go up and we watched it go down. And I'm going to read you a little excerpt, right? So it started with bad top, was the beginning of the conversation, guys. And I want you to see what the market looked like when I said it. I said, where the hell is it? I said bad top, right? So we let it be the read. And then my brother said, I'm not sure it is. It might be overrun, right? And I said, okay, but I'm going to keep it simple. I'm not looking for the short. I'm looking for the read. I said, I'm not sure that it's a bad top either, right? But why not let it break or roll? It's such less stress. And then I said, it's not a clear path from a bad top. I'm like, large says down, but into support. Let it break and pull back to it. Then you don't have to hope. Up or down. Take your shots, not my shot. See you continue. Good morning, Miss Cindy. So what you do is you're looking at shorts here, but you don't have a clear path. And that's just kind of what it is, guys. And if you let it be that simple, if you let it be the read, and we went back and forth for a little bit, because my brother is the most outstanding chart reader I've ever met in my life. It's unbelievable what he pulls off in a fraction of a second. But if you just let it be the chart read instead of the hope for a trade, guys, you didn't go long and you didn't get stopped out. And if you let it be the chart read instead of the hope for a trade, you didn't go short. You didn't get stopped out. See where I'm going with this? And if you said, hey, it's just not my money into the line, that's okay. But since this one had the potential to break, I can take it from resistance inside of favorable large triggers, and maybe I ride it down to support where I become patient once again. So the idea is that you go through these reads enough that you're willing to take this one and you're willing to sit on your hands on that one. So guys, this is my first hour, and we're going to go back and talk about how to study and how to become a better chart reader. But I'm going to tell you right now, to become a better chart reader, you have to stop looking for the trades. You have to start focusing on the reads. And then once you focus on the reads, your only options are either your rules are met or they're not, and let it be that black and white. So guys, I'll be back in 5. You guys watch crude oil for a minute. Focus on the read. And then when I come back, we will look at the charts that you guys have posted, and we're going to go and we're going to work so hard together to become chart readers. Back in a minute. So Steve, what's your read, brother? You've got momentum, right? Oh, CL News. You said news. So not only do we not have the advantage of a clear path, we have the disadvantage of 10:30 reports coming out. So we'll see what happens. Back in a minute, guys. All right, guys, let's get back at it and see what's going on in the wonderful world of day trading. That's it, Rob. That is it. If price reaches the area and the triggers don't break, it's okay to do nothing. See how it did it there twice? When the small and the large get through the area is broken. If the small get through and the large do not, the area has the potential to break. And what does it take to break areas, ladies and gentlemen? It's that one thing that we've been talking about all day long. What is the key to everything we do? What is the core to what we teach? I want you to all say it, or at least say it to yourself. Guys, momentum. Momentum is the supplier of dreams, and momentum is the breaker of areas, and momentum is why we look for pullbacks. And even when it's ugly, momentum can still win. But let's go to the other side of that. Momentum doesn't always win. Right? You can have strong triggers into an area, and these areas can still hold. So the easy money, ladies and gentlemen, happens in between the areas, and it means that you have to be patient, because crazy strong triggers into an area, look at the bounce. Crazy strong areas from an area, look at the win. Crazy strong triggers into an area, look at the bounce. So guys, let's talk about how we become chart readers. It starts with, Rob, exactly what I told you yesterday. I want you to start, and we're about to have news in crude oil, guys. I want you to start on your large chart, and every time you have strong triggers, I want you to circle a tail. And I don't want you to worry about whether it's into an area. I don't want you to worry about whether it's your rules or whether it's not your rules. But every time you have strong triggers, I want you to circle a tail. And you can go back and do this 10 days. And what does this tell you? This will show you just how often these pullbacks work. And there's rule number one, guys. That's the advantage of momentum. And I'm going to go to this look right here at 9:42. So at 9:42 a.m., we had strong triggers directly into an area. And at 9:42 a.m., strong triggers gave us a pullback to an area inside of favorable large triggers. And the momentum gave us a retest. Guys, do you see how I had momentum and a clear path? Or not a clear path, but an entry area? Even when it sucks, guys, sometimes momentum can create a winner. But what you have to ask yourself is, how many times does it not? How many times does price reaching an area create a reversal? So that's the second half. Is after you circle them with momentum, go back and say, well, shoot, that's a termination. That's not my trade, right? And you get rid of that circle. Rob, that's not your trade. That's a termination. Does that make sense? This one had the potential to break. I'll keep it. This one hit one-to-ones. It's not my trade. Guys, this is becoming a chart reader. This one has the potential to break. News. Did we get news? News in 1 minute, guys. Hey, Ace. But do you see what I'm doing? And let's go back and find another one that we circled. Not into an area, potentially my trade. potentially my trade. So what you're doing is you're kind of whittling it down. First, I'm going to circle every tail with momentum, right? And then from that tail, I'm going to ask myself, did I have a clear path? This is how you become a chart reader, guys. Not when the market is moving, hoping to catch it in the moment. When the market is still, when there's nothing moving, and you start with your large chart reads, guys. You always start with your large chart reads. So let's go to the next one. I have momentum, right? I have a clear path. I don't really have an entry area because they're below the large triggers. So what can we do? Can we wait for a reversal bar maybe? A little confirmation? Something to make us feel good about it? Let's do the large chart read again. Looking for those tails in the S&P. There's one. And then it's okay to do that, right, J. Roth? That's just a big grinding market. That's tough. There's momentum with a tail. It's hard to do it, guys. It is so hard to do it. But if you start getting into this idea that the large chart leads the way, that the large chart read, not my desire for a trade, is what we're looking for, then life kind of works out a little better for you. It really does. So I've given you guys the plan, right? We've talked about it. So the second half of class is just chart reads, guys. It's going through and talking about what you see, what you've done, and whether or not rules are met. That's it. We're just reading charts. So I am going to scroll up. And Joel, you got me after class yesterday, but I want to bring it in. Joel says, odds favorable momentum, no clear path, good top. And because of the good top, Joel, you let the read lead the way. And I want you to recognize this. Joel didn't say, I hope it goes down. Joel said, because I have such a good top, and I do have that area right at the triggers, I'm willing to take this trade. Joel split triggers, right? So tight risk. I love this trade, Joel. It's a chart read. All right, and then Rob, you posted this one yesterday too. So Rob, can we talk about taking pictures real quick? I'm going to help you out, and I think it's going to make life pretty easy on you. And then Rob, do you have Capture or Snagit? Just so I know which one to use. You have Snagit. Okay, cool. So Rob, what you're seeing on my screen here is one monitor. Do you have both of your screens on one monitor? Okay, cool. So we're going to do a couple things first. The first thing I'm going to do is we're going to talk about just charts and adjusting and scrolling. All right, so I'm going to make this one a little patriotic, right? And this one, we'll just take it completely off. Because we've all gone to line stuff up and it just doesn't line up, right? So let's talk about chart scrolling real quick. And just making sure that we're good. So I'm going to take a picture of both. And there's two things. There's an F and there's an arrow whenever your charts seem to be out of sorts. The arrow will always pull me back to the most current bar. And then the F will recenter my charts. Whoops, my chart gives... And I just killed my Ninja Trader. My brother always tells me don't draw on them so much, but I did anyway. So here's the first step. But now I have to open NinjaTrader back up because I went through and kind of I killed it by squishing it like that. I broke rules. Okay. So that's going to come back up. So this is the first part. Is the arrows will recenter your chart. So I'm going to go to the software user guide. And let me find it in here. Chart templates, market flow, crude oil. I thought he had it on here. There we go. Moving, scaling Ninja charts. So that's going to be the first thing, guys, is making sure that you can get your charts so that they are current, so that they're in a good spot. And I'm going to put that in there. And I'm loading up right now. I'm almost done. Almost there. Oh, man. That's okay. We'll do this. So what that does for you, Rob, is let's say you're squished and you're pulled back. Oh, I'm still calculating. I have to wait a second. I'm going to let that finish calculating because I'm just going to mess things up. Being able to scroll is the first part. Being able to scale your charts to get them right, that's the first part. And I am still calculating. Let me give it just a minute. And then once that's done calculating, I'm going to show you how the F works. I'm going to show you how the arrow works. And then from there, we're going to take a picture because, guys, being able to scale your charts and make sure that we have the most current information is really important because we're going to look at our pictures. We're going to look at the entries. We're going to line them up. Come on, charts. Here we go. All right. So I'm going to slide this one over this way. So does everybody see how on my large chart I don't have that black highlighted number? That means that I'm not on the most current bar. So anytime you don't see the black highlighted number, whether it just means that you're trading off screen. See how it goes away? If I click the arrow, it brings me back to the most current bar. If you're all the way back here like Cav, click the arrow, it puts you back where you need to be. It's like a typewriter. The second thing is, let's say hypothetically, I'm off screen, right? I can't see it, but I don't have the arrow, so I know it's on the most current bar. This is where you click the F, Rob. So if you make sure that there's not an arrow and an F on both charts, then you'll always have them in line. You'll always have the most current bar. On the bottom here, if I click on the bottom and go back this way, it makes it bigger. If I go that way, it makes it smaller. I don't need all this, right? All I really need is about that much on the large chart. That's more than enough on the small chart. So once you have that in place, you're going to pull up your Snagit and click Capture. So what I want you guys to do every time you take a picture, whether it is Capture software or whether it is Snagit, is once you do that, it's going to give you the crosshairs. And since you have this on one chart and both your charts are scaled, it's easy. You're going to go up to the very top of the left-hand side and click your left mouse and just hold on to it and drag it all the way down to the bottom right. And I want you guys to look to get price as well as time. So the bottom axis and the vertical axis. And then when you release, it's going to give you that picture. So Rob, what this is going to do for you, man, is it's going to make it where you can say, hey, Mark, there's my momentum, large chart, right? And it's mimicked on the small chart. And Mark, I have a clear path on the large chart and I don't have divergence on the small chart. And you can type all this stuff out and you can say, I don't have an entry area, right? We talked about it as it was happening. So if you were hell-bent on breaking your rules and taking the trade and you took a reversal bar, Well, then you started losing momentum, right? And you still don't have an entry area. And guys, the simple adherence to rules. I had momentum, and I had a clear path, and I didn't have an entry area, which means that 33% of my advantages are gone, which means that I can't believe in my heart that this is a high probability trend trade because my chart read told me that it's not. And sure enough, look what it does, guys. It pushes back down. You're beyond the correction point. Absolutely I could, Rob, because look at the picture. So there's your red, right? Notice that you don't have it on the most current bar, which means right now the market is going short. I see the most current bar. Your market is trading at 77 something. I have no idea what, but it's all the way down here because this market says up with momentum and this market says down with strength. So I could tell that you're not in sync. So practice getting them in sync, and then Rob, do me a favor, take a practice picture. Get them both so that there's not an arrow and there's not an F. Anytime you see both, tap them and then take your picture, and then we'll be able to put them together. And guys, being able to take pictures is one of the most important lessons that you could ever have because being able to take a picture gets you a private session with me by telling me what you're seeing. Good bottom. Not a clear path. It's a 50-50. I agree. Once again, split triggers, Joel. You take it from the top and you get out of trouble. This is a nice trade, Joel. That's a termination. Look for the pullback. That's strength. Look for the pullback. Not a PSO, Joel. How come? Let's talk about verbiage real quick. Not a pivot stop out. How come? It's just a pivot. It's just a pivot. All it is a loss of momentum, Joel. And I thank you for posting that because that's one of the biggest mistakes, right? This is just a pivot. That's all it is. It has a loss of momentum. It's right there in the words. This is the pivot. They try to go long. That's where they got stopped out. Pivot, stop out, PSO. And then with the triggers above, off we go. So that's your pivot. And it never got stopped out. That's your pivot. Notice how the triggers didn't break through there, Joel? That's your pivot stop out. And it corresponds with support, and that reverses the market and gives you this beautiful look. Great read. Just a little verbiage. And guys, if you're always looking for the read rather than the trade, you're going to understand whether your rules are met or not. Great job, guys. And then Lyle, we talked about yours in pretty great depth. I love it. Momentum for the win. But always annotate those charts, guys. Make sure that you can come back tomorrow and repeat it. All right. And then Mike Lynch. And Mike, I see you posting, brother. Nice job. So 49.76, 49.76. So let's do a couple things here. Coming from a good top, I like it. Odds favorable momentum. And room to run. You hit your acceptable profit goal. So moving over to 5-1 chart to look for an entry. Mike, are you with me in here? You promise, and I love it. So this is 49.80 at the entry right here, right? This is 49.80 right here. Can we agree that it's a completely different read than up here? Let me show you what I mean. And I still like the trade, but I'm going to show you exactly what I mean. This is the bar that you're getting on in. Here, it's strong with a clear path. Here, you're trading into support and a divergence low, right? So the annotation is Good top. I love it. Termination creates the reversal. Odds favorable momentum. I love it. Not a clear path. What does that mean? Let it be perfect on the small chart. Are you following me? I love this look. So on the small chart, it bounces off a support, doesn't it? Reversal bar print, so you're looking for an entry point. You choose to put the limit order short at 49.80 at the mid band at the highest correction point. That's rock star, isn't it? Terminations can create a bounce. Yours creates a bounce with strong triggers and no divergence. Mike, I love this trade, especially coming from a good top. Stop loss is 5 ticks above. I love that. You set target, first trouble, second trouble. But I think that the key to this one is understanding the challenge, right? The challenge was not a clear path. So strong triggers, no divergence, tight risk, and then profits at trouble made sense. Does that make sense, Mike? I love the trade. You recognize the good top. The momentum is overwhelming. The strength is beautiful. The entry is perfect. And you don't sit and hope that your world changes, right? Because the termination won. So you got paid rather than hoping. I love this trade, Mike. I would take this trade all day long. So your job now, Mike, is to take this picture with the annotation. Let's go through the whole process, right? Is to take this picture with the annotation and put it into your plan. Don't put the one without the feedback. Get the feedback into there. So that tomorrow morning when you look at that one, you say to yourself, man, from a good top with momentum, no divergence, strong triggers, perfect entry, this is what I'm doing in life. This is what's going to get me to that next level. I like this trade. Guys, if you're brand new, all termination conditions are bad. If you're a chart reader, you're going to be able to take advantage of some stuff that you never thought you'd be able to take advantage of. Great post, Mike. Thank you for sharing. It's pretty painless to share, isn't it? Most people don't because they think I'm going to beat them up, because they don't want to be wrong, they don't want to be embarrassed. Guys, I try to keep it pretty warm and fuzzy, 100% all the time. Doesn't do me any good to beat you guys up. It's no fun for me. So here's your next one. Good top, but not a good 13-2 chart read from me because no odds favorable momentum, but I missed it being anxious to get into a trade and went to the 5-1 to enter. You got lucky. Remind yourself to breathe and be selective. Hey, Rob, that's the best group of people to look like an idiot with, but you're not an idiot. Because while we're all these puffy chest, machismo, hairy knuckle, gold chain wearing mofos, right? Guys, we're all brand new. We're all brand new. We're all learning to read charts. If you weren't learning to read charts, why the hell are you in my room? To show off? Guys, this is an education. I hate to look like an idiot too, but you know what? I've learned that in order to get to where I want to be, sometimes I have to. All right, so you've got the good top, Mike. It's trying to give you some momentum. Wouldn't you agree? The smalls are trying to push. They're getting below the large. It's not perfect, but the trend is down. The smalls are below the large. I'm coming from a termination. And you've even let all your triggers roll. You place the limit order at the midband. You set the target. Managed out close position. Lucky 250 gain. I agree. I love the large chart read. I love the termination. I love the reversal. I love the push down. I love that everything says down here. But it's so spread apart It's difficult without really having the best momentum. Is it going to go from here? Is it going to stop here? Is it going to come up here? That's all right. That was a good one. But the best part is that you realize that you rushed it. Because now, next time you take a trade, you will breathe and you will slow down and you will say, hey, maybe that wasn't my best of the best. I'm going to make sure that I do it right next time. Guys, that's all we can do is look backwards. And annotating the chart made you realize it. Oh, Mike, I'm going to reach through and give you a hug. Best ever, right? And there it was right there. And then, Mike, eventually you get all the momentum and not quite a clear path, and you take a momentum style trade and get paid quick, and you take a momentum style trade and get paid quick. That's Ron's, right? Giddy up, giddy up, giddy up, giddy up. Is it worth the 2 ticks? I don't know what your commissions are. Is it worth $75? It might be. Mike, what you have here is a momentum style trade. Your best entry comes from the 1-to-1s here, and if it doesn't make it, I like where you got in. But see how you never had a slowdown? I think eventually you can turn these 2 trades into 1 trade. Getting in at 99 or 92, and because the strength is there, just hold it to 88, right? Make your $200 rather than trying to dissect it. Go break even when you're up 50. And Rob, that's why we don't trade news. Because there are emotional responses that come from it. Where am I? That was Jay Roth. Jay Roth, I hope that made sense, brother. Dissect it a little bit, right? Take 1. Use that momentum. If you trust it enough to take a trade, trust it enough to get you a little money. It's hard for me. Those trades are hard for me because I get wonky. I get nervous on those trades on fluctuations because I don't have a solid area backing me. And then, who was this? Was this Andy? I can't click and then talk. This was Andy. Not odds favorable. Agree. Not a clear path. Divergence. And it works out. Sim on NASDAQ. Waning triggers through the area from a strong bottom. Met both goals. 200 on Sim. All right. How many times is that look going to work for you? That's my question, especially on NASDAQ. Because that was odds favorable momentum and it bounced like it just fell off a skyscraper. Not saying it's not a good trade. I'm saying, is that where you want to risk your money? Is that where you want to put your vacation money? Is into that look? Because it works just enough to make you take it again, right? It works just enough to make you risk it here and end up losing, or make you risk it here and getting stopped out. So, something to think about. And then Joel, there's that same one, right? It's okay. We had a great lesson there. And you didn't even talk about your 50-50, Joel. You didn't even post it in the room. But you had a great top 50-50, no divergence. That's a beautiful short that didn't work. And yeah, but Andy, all right, you guys just got a story out of me. You ready? And I don't know if you've heard this one yet, Andy. Let me finish Joel's praise real quick. Joel, the perfect 50-50 didn't work here and you didn't bother to show it to me. Termination, odds favorable, potential, no divergence. I would take that one all day. Celebrate your entry. And this one is a great look too, right? It just didn't work. And we had the split triggers talk. And what do you notice? Resistance, can't make it. Resistance, can't make it. Lower divergence, struggling. So we're starting to see a little bit of a pattern there. All right, Andy. Back when I was younger and probably better looking, I road raced motorcycles. I was one of those, let's get into our leathers and go drag a knee at 200 miles an hour kind of guys. Maybe not 200, but and I was out in a practice. I used to do endurance races, and I was out in a practice before a race, and I was going about 60%. And I was, instead of doing 150 on the back straight, I was doing 120. Instead of railing through the turns, I was kind of lollygagging through the turns, having some fun, doing wheelies, whatever. And a buddy of mine comes by me and he looks at me, like over his shoulder, stares at me in this practice session. And when the session ends, I go back to my pits and I'm sitting there and he comes over and he's not happy with me, Andy. He's a buddy of mine, but he's like, dude, what the F are you doing out there? I was like, man, it's just practice, right? It's not real. It's not the race. And he goes, yeah, but if you don't practice like you want to perform when it means something, how on earth are you going to perform when it means something? And I love that story because it is so relevant to what we do here. If you're willing to take unnecessary chances on simulator, if you're willing to hold when you shouldn't hold, if you're willing to enter when you shouldn't enter just because it's simulator, you're telling your body that it's okay. You're telling your brain that it's okay to break these rules and hope for the best result rather than having an advantage. And Andy, that may not have been what you were doing, but I really think that that's it. We want the large and the synthetics, piggybacked. That's the best look, Rob. That is the absolute best look. And Andy, I hope that makes sense because what happens is you get lucky on simulator a couple times and your brain says, dude, we should do that live. We should do that live because, man, it worked. And it just, I've done it. And that's the only reason I share it is I've done it. And then Ace J, circle tails yesterday afternoon. I love it. How many of these were your trade, Ace? Yeah, so Andy, doesn't it make sense? Instead of jumping in on simulator, hoping that creates this amazing ability to recognize things, doesn't it make more sense to do what Ace just did, to go back and look at these and circle tails and then decide whether or not it fit your rules? And Ace says none of them. None of these fit his rules for a high probability trend trade. None of them were his entries. And when the market grinds like that, it's hard, right, Jay? And then tomorrow, maybe Jay does the exact same thing. And he does find some entries, right? Tomorrow, or this afternoon, Jay says, here, let me circle this one. Oh, and that might have just missed me, right? And let's scroll back, and he might say, hey, let me circle this one. And man, it never got below the synthetics, really. I might have caught it over here. Or I might have just taken it right here, and my stop kept me safe, and then it stopped me out because it's a 50-50. So Andy, take the burden of trying to catch it live off the plate and go back and circle some tails and write some rules and identify some advantages and literally write on there. So Ace J, the second half of this one is when you circle these tails and you go back and you do this little drill. Where's your picture? Is also annotate it, right? You say 3 areas to enter at the midband inside of favorable large triggers. Midband is below, midband is below, midband is below, below, below. Not one of those were inside of favorable large triggers, were they? But the market went up. But the market went up, so it had to be a good entry, right? So much so that I wrote that I had 3 entries. Ace, did you really have 3 entries? Or were you fighting divergences? Or were you trading from beyond areas? And then, Andy, this is kind of the same thing, right? Well, it wasn't really a trade, so because I see what happened after, I can write that that was my entry. That wasn't your entry because you lost, you lost, you lost, you lost, and then it went. I hope that makes sense without feeling like I'm beating you up. But you lost 4 times at the midband before it finally went up because your rules weren't met, right? That one worked, and that one worked, and you start feeling confident, right? And then that one started to work, and then you lost. So I know this is ace, but I think that that's kind of the idea, right? Is we want to make sure that every time we take a trade, we want to make sure that every time we take a trade that, yeah, the rules are met, that it's a read, not an emotion. It doesn't matter what happens next because what happens next is irrelevant. If your entries are wrong, you're never going to get to what happens next. And then Lyle, you got in up top for some reason and you got out down here, and that sure looks like a nice trade. So Ace, do me a favor, right click on your chart and go to data series. And then from data series, scroll it all the way to the bottom and where it says plot, executions, text and marker. And that'll give you the entries, the exits, and the prices at where they occurred. And that's kind of cool too, because if you're trading like a 4 lot and you get a split entry, you can actually see that you didn't get the entry that you thought you did. And then once again, you know, I always like to ask Lyle, why? Why did you get stopped out of that trade right there that you didn't share with me and then decide to get into this trade here? Right? Where did you go short before you let it retrace to resistance? Because this looks beautiful and I love everything about it, but doesn't it make more sense that we need to fix the mistake in front of it and learn how to avoid that one? Just throwing that out there. And you did that right before news? No, that was, dude, you got out right at news. That was awesome. It's a beautiful trade, Lyle. By the way, it was a beautiful trade. I just want to see the one before it too. Odds favorable, and Joel says, you know what? It's not in there. I'm not going to take it. Joel, it can be that easy, right? It can be that simple. Either my rules are met or they're not. Shoot. Steve, if you'd post a picture in class every now and then, I bet you I get you too. All right. Mike Lynch. Why is it a good bottom? Yeah, I know. You've got rules, Steve. Just a loss of momentum, right? I'm not sure what happened back here, but you may have had a termination that reversed it, that gave you the look, right? And then it's just got to work itself out. Gap theory, and it comes back, and then it heads back up. And you're starting to get the momentum, and I'm trying to figure out where you got in. 04. So you didn't get in till up here. And I love this trade, Mike, because you let the problems clear. The momentum was good. We got to work on your arrows, because here you have you trading directly into an area, but the reality is you let the area break, and then when it pulled back to the one-to-ones with momentum, you just rock start it. This is a beautiful trade. But when you go back and look at it tomorrow, yeah, point out where it's at. Because what does that say? That says no effing way, right? But that says ye freaking haw. So make sure that you know why it was ye haw and not no effing way. And when you do that, what you're doing, Mike, is you're saying to yourself, this is my look. This is my look. Not this. That's not your look. That's horrible. Ew. Bad arrow management. That's the BAM technique, the bad arrow management technique. But it's one of those truth in advertising. Your trade is absolutely beautiful, and I like everything about it. And I think you absolutely killed that trade. But I think if I went back to study it, if you have me looking for this, I'm going to get wiped out more often than not. Great trade, man. And then Andy, looks waning to you. Why? They're outside, right? Bottom came from past here. That's odds favorable in a clear path, Andy. There's no other way to look at it. There's no 50-50. Oh, 505. And no, we're not scalpers, but your ATM didn't appear, which caused a small panic on live. Got out up here when the market went up. Andy, I love it. That's great momentum. Your large chart is beautiful. Everything about your large chart is beautiful. And there's Mike's momentum. Pow, pow. And then you take a shot, not from an area, right? Rule number 3 isn't merit. Your choice for entry was 2 ticks above the 1-to-1. Oh, over here. Your 1-to-1 is 0.4. You're in a 1.5 higher. And eventually the 1-to-1 was outside of the larges. Andy, I like that you got out aggressively because that market did turn. Let's talk about the phrase. Eventually the 1-to-1 was outside of the larges. Large triggers, right? How does that translate from a chart read standpoint? How does that translate from a rules-based entry? And that's kind of one of the things that I want you guys doing is if I can type on my chart after the fact, I didn't have an area inside of favorable large triggers for entry, you have to make the decision. I'll take it anyway. Or I won't take it because of that. And neither answer is wrong, ladies and gentlemen. Absolutely neither answer is wrong. But I think it's pretty cool how you see the result, right? After the S&P doesn't have areas inside, it did get one bounce, and then I believe it cratered completely after that. So Andy, that was a fortunate management, aggressive management. Does that make sense? And it just missed you. Oh, that was so close. No, that's beautiful, Andy. I think it's great that you got out. If you're like, oh, my ATM's not, let me get out, I can't management. That's brilliant. That's the right thing to do. A lot of times people go, well, I hope it goes up, and they don't bother with stops, and then they get just absolutely annihilated. There's like cameras behind you. And then this one, man, it was so close. We saw that one, right? It just didn't get you. If the pullback's not met, if it doesn't get you, Andy, either slide it down to where the next pullback should be or cancel that thing out. When you leave these things hanging, you will forget about it eventually. And then when the market's on its way up, you're going to go short and get flattened. Don't ask me how I know. There it is, Joel. 50-50, great top, no divergence. The stops don't print until you get into the market. So if your stops don't print, it means that you don't have an ATM strategy set. Right? So if your stops don't print when you get in the market, you don't have an ATM strategy set. You want to see how to fix that? I'm still calculating here. Let me have that come up, and I'll try not to crash my my computer. You know? Okay. And then Joel, it's just a 50-50 that didn't work. That's all it is. And Andy, that was such a beautiful setup. It just didn't get you. Happens sometimes. And then Joel. Oh, that's the one we just saw. I like it. Great management. Everything about it, Joel. Absolutely love it. And then Cav. Making my tired eyes work. Pull back from the mid-band into the large triggers, place a limit order on the 5-1 chart, reached your first target, pulled your stop, got stopped out, didn't lose money. Perfect. Looks like rule 1 is met. Didn't see the blue fib extended into the large triggers because you're super tight here. Cav, you have 3 days worth of data on this chart, right? If you can't see your fibs, stretch it out. Make your fibs print in front instead of behind. And I'm not sure how to do that. Jason can do that for you. But if you look at your picture, where did it go? Dun, 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 dun. If you look at the picture, see in between the bars, you can still see it. I don't know if it works on the new software. If you shift and mouse wheel, it moves your chart. You used to be able to click on it. And I don't know what the setting is to make it work. Oh, Steve's going to save the day on this one. But Cav, it was a good look. It had momentum, right? And then your first entry, bad bottom, but momentum. But it's coming off of resistance. It's coming off of a mid-band. Everything is into a termination. And you pull one off, right? Not trading from an area, trading from a trigger. But it already reached its target. And just, God, no reason to hold. If you're going to take these aggressive against it, man, get out of trouble. That's 93 to 03. That's a $400 trade. And then GTFO, right? On 10 accounts, that's $4,000, Cav. Steve, thank you for that. No reason to hold that one. And then 50-50 with divergence, and sure enough, it doesn't work. Get paid, guys. Get paid. I love getting paid. Makes me happy. Rule 1 not met. Place the limit order at the mid-band. You're in at 25. Clear path. Target reached. Target reached. Nice. Cav, can I point something out? With absolutely nothing in the way, you got aggressive on taking money. But with everything in the way, you held on for dear life. Do you see that? With absolutely nothing in the way, you're like, I'm so scared. And you probably didn't really say that, but there's no reason to exit there. Everything's down. Every trigger's down. Everything says that divergence didn't print. The only thing you're sure of is that everything is pointing down, right? And it finally got below the areas. But here, so you're saying that it went through your target. It went through your target and then pulled back to your target? So maybe your first target was down here and you clicked on it and put it above price so that you could get a fill? Because if your target is 15, your target got hit here on this side, not on the way up. Just one trade. So you had two contracts. You're in here. And the market did this from your entry all the way down to there. Let's get rid of some arrows. You went from 25 to 0975 and back up to your target at 15. So you're telling me that it didn't fill here. It produced 1, 2, 3, 4, and then it was the fifth bar that finally registered it on the way up? Does that make sense? I'm looking at it and I'm trying to make sense of how you could get your target hit on an up bar. And the only way I can do that is if I sell the market here and I move my target up here, well, then maybe I can get in on an up bar, right? Target filled on the up bar. And you never move them. Okay. What if there's a fib in the way? You still won't move them? Right? So there's 20. Your targets are at 40 and 60 ticks. That was 20 ticks to your first target. All right, I'm not going to try to dissect this, but I'm not going to lie. It doesn't make a lot of sense to me. Bad bottom, lots of momentum. You take the pullback, and then I love it. Again, 20 ticks to your target. And then once you hit a mid-band from a bad bottom, we got to get you to stop holding that contract for so long. Does that make sense? Am I reading? Oh, so that's 20. I suck at math, Cav. But so I love targets. I love targets. I really do. Targets are amazing to me. But if I'm trading short, right? And that line right here, where that arrow is, let's say that this is that represents 30 ticks. This represents 40 ticks. Does it make sense to put my target on the other side of the fib? If I've got a pivot stop out, does it make sense to get stopped out all the way up here? Well, Mark, that was only 30 ticks. There's going to be times, Cav, where you got to take 30 ticks, brother. There's going to be times where you've got to take 28 ticks, where you've got to take $100 instead of $200. Just get paid and then re-enter, right? Because this is a termination condition. And I think we can double your money with a little bit of management because you're such a good chart reader. You know where the market is likely to go. So for entries, be rigid, right? For exits, use areas. Use the idea that if I reach this and nothing breaks, I'm just going to get out. I'm just going to get paid. Because really, that's my goal every time, is to get paid. And Cav, your pictures are awesome. Your chart reading ability is unbelievable. It always is. Joel, divergence prints, odds favorable, perfect entry on the split triggers, right? And then Joel, you didn't get in on the reversal bar. You got in before the reversal bar. That's okay. It happens. And Cav, if you want, send me some pictures of what you did this morning. Email them to me, and I'll respond. Joel, so you got in at reverse bar. Did you really? No. Okay. And then you hit your target, and look at the hold. You took your first target because you knew that there was problem, right? And then you get two divergences at a mid-band from a bad bottom, and you gave it all away, every bit of it. Guys, management is the hard part. I promise. Management is more difficult than entries. Entries will become easy. Management means that you got to let go, that you got to say, it's not my money. That you have to say, this is a problem. I need to get out. I need to get paid. And then, Mike, triggers broke through. The smalls did. The large didn't. Hold on. Let's get your time frame here. 11 a.m. Okay. Hey, you got your arrows right, brother. Good job. And you take a little pullback to resistance. Got stopped out on the last one. You will. So triggers broke through. Which triggers? Large or small? What do you think? We all are, Cav. We're all a work in progress. And guys, this is the beauty of a collective. Has anyone ever played a scramble in golf? And your short game is awesome, but you can't drive to save your life? And you get paired up with a guy that drives, and you just learn from each other all day? Guys, that's kind of what this classroom is. It's a scramble. We're all going to make different mistakes, and we all get to learn from each other's mistakes. And I make mistakes too. And if you think you're immune to going off your rocker, you're not. We all go off it eventually. So Mike, weak triggers at a fib. You gave it the best chance by letting it break and pulling back to it. I like the first exit. And then when that divergence prints, GTFO. I like that you didn't risk a lot on this trade because you didn't have the momentum, right? And you didn't have the clear path. So if we use our cool little slide box, I didn't have momentum and my triggers didn't break. So you were weighing heavily on that entry area. Would you agree? Always trying to just target 3-point winners on 4 lots. I love it. Guys, 3 points on the NASDAQ is 150 bucks. That's a $600 trade. Mike, if you shut down every day after one trade that wins, what is that? 3 grand a week, 12 grand, 144,000 just from taking the money. There's such a big lesson there, guys. There's such a big lesson about being okay getting paid. Right? So there's your termination. Pivot, stop out. And there's your immediate momentum. Ace J, if you don't have a set of rules, NASDAQ should be scary to you all the time. Why? Because area's overrun all the time. Because it moves 10 times faster than anything else. I'm going to see if I can find a couple. Problem, problem. Exit, exit. Get paid, guys. Problem, problem. Get paid. Don't give it back. Had to take this one twice. Made my money on the correct side, made my money at the problem. Guys, it's okay to not hit home runs. Terminations creating the full reversal. Full reversal is giving me odds favorable momentum. Odds favorable momentum gives this area the potential to break. Are you guys following me? If I get a reversal bar right here, my highest point of support is 35.50. My lowest point is 30.79. Mike Lynch has an order right there saying, come get me. Triple dog dare you. And Mike just said, damn it, they hit fibs. There's your read, guys. That's what we do every day. Isn't that pretty cool? And then Cav, are you running the new software, Cav? Just curious. Not just Ninja 8, but John Novak's new software. Did you get with Jason and get a file with your name on it and put everything in place to get the brand new? Okay. You don't have to. I've been running it for about 4 or 5 weeks now, and I absolutely love it. And it's clean and it's clear. And I think the fibs are just as good, if not better. And I like the look, right? And then Cav, the only thing is fighting the small triggers. But that's the look, coming from the bottom with the strength, See how your large triggers are up and your smalls are above? That's the one. And then it still dances on the NASDAQ, and then ultimately it goes up. I like that trade, man. Nice job. Great job on that one. Yeah, guys, if you haven't gotten it, shit, my brother spent damn near $1 million making it right for you guys. And there's still one little problem in Ninja, but guys, I'm telling you, I crash almost never. Every now and then there's still the chance. What do we think, guys? Bad bottom didn't work out, right? But we've got all the divergences coming off the low. Maybe it was just overrun. You don't get what, Joel? And I've got momentum. And I've got a clear path. Guys, what should I be looking for? Does anyone have rules for this look? I don't know. You might not. Totally missed that 11 o'clock break, guys. I'm going to let you guys watch this. We'll see what happens. I'm going to take like 2 minutes, and I'll be back, and we'll finish it out. Joel, I don't know. If I could find the answer to that in the fix, I would be the richest man in America. But I'm not, and I don't. And eventually it just has to suck so bad that you stop doing it, I guess. I'll be back in 5, guys. Or maybe 2. All right, guys, I'm back. All right, so it looks like psychology is the last 30 minutes here. Hey, Mike, have a good one, man. Thank you for posting. It's nice seeing what you're doing. All right, so I'm a little leaguer, okay? I'm a 9-year-old kid, and I'm playing baseball, and I go up to bat. And the pitcher throws, and I miss. And it's strike 1. Has anyone ever played Little League in here? Softball, anything? And when you miss the first pitch, when you're 9 years old, your pulse races, right? And you start thinking about all the bad things that happen. You start thinking about, what if I strike out? What if it doesn't work? What if I'm a failure? What if it doesn't work? And then he throws the ball, and you swing the bat, and it's strike 2, and that escalates, right? And at this point, you're not even thinking about the pitch or anything. You're just going to swing that freaking bat as hard as you can next time and hope for the best. Guys, trading is kind of like that. You make your most mistakes after a mistake. Guys, if you've ever played golf, and if you hit a great shot, your next shot is likely to be a great shot. And if you hit a poor shot, if you allow yourself to get frustrated, to allow that one shot to define you, you're more likely to hit a poor shot. And guys, I've done that. I've duffed a drive and then triple bogey because I keep trying to make up for that one bad drive. You've got to just keep it pragmatic, guys. And the less emotion you put into it, the easier it is. And that comes from the reads, right? What is my read right now? My read is odds favorable, clear path. And guys, I am obligated through my plan to have a limit order waiting. That's it. And there's nothing else to do. Whether it wins or loses, who cares? I've got an advantage. And if it does lose, well, I can't go take revenge on the market. I just have to wait for the next time my advantages are there. Andy, termination, odds favorable, smalls break, perfect entry, money, money. Beautiful. Can I tell you why you get anxious, Kev? Andy, virtual high five, brother. What an outstanding trade. Termination, full reversal, odds favorable, area at the triggers, easy money. Easiest money ever. Because every rule was met. Andy, how did it feel? Were you calm? Were you nervous? Were you anxious? Or did you say, holy shnikes, this is the greatest look ever, let's get paid? And guys, I'm telling you, you'll get to that point. Anxiety comes from knowing you're breaking the rules. Anxiety comes when you look at your chart and you say, well, I don't really have momentum. I sure hope the clear path in the entry area pull me through. I don't have a clear path or an entry area, but God, I hope that momentum works out. Guys, that's where anxiety comes from. And I know that it's easy for me to say that from where I'm sitting, guys, but I'm going to tell you, my brother told me like a year and a half ago, he goes, I don't care if I win. I don't care if I lose. He goes, I only care if I take the right trade because I'm not in control of anything. Yeah, Andy, it's crazy fast. And you literally will, guys. You'll get to this point where, and I'm going to use Andy's chart as an example. After the fact, everybody can see that this is a beautiful trade, right? At this reversal bar, you start second guessing your methodology if you're not completely comfortable with it. When you take this entry, you start worrying that your stop is too far away right here. And then you start creeping up on it. I hope I don't lose. I hope I don't lose. And then when it goes down and it bounces, this is where I see you guys get stopped out break even a lot because you're not trusting the method. It's nice when there's no time to worry. So looking at it when it's still, guys, it makes it easy to trust it when it's live. And it takes time to develop trust, and I don't care who you are. It has, right, Cav? So, and just, I don't know if I've ever said this in this class. It's everybody's. I don't know if I've ever said this in this class. Guys, I've made every mistake that you guys will ever make. I have blown out accounts. I've blown out big money accounts, not just Apex accounts. I've taken the wrong entries. I've taken the wrong exits. Guys, when I went live after my first giant blowout, Cav, let me share this with you. I would take about 25 trades a day. And at the end of the day, I would be up about 18 ticks and down $200 in commissions because I was so terrified of losing that I stopped following my plan. The easiest way to get through that is to go to your chart, and when you have odds favorable momentum, circle a tail. Guys, there's no pressure of a trade here at all, right? I'm just recognizing patterns, and that one didn't hit. And that one did. Everybody has it. Trading would be so much more enjoyable. So, my brother and I had the conversation today. And I'm going to tell you right now, guys, most people that are super close to being where they want to be have days where they dig a hole in the morning when they're excited, when they want to make the money and not follow the trades. Has anyone else ever done that? I did it yesterday. Yesterday I dug an $800 hole. I was down $800 yesterday, guys. And then I said to myself, I said, holy crap, Mark, pull your head out of your ass and get it back. And do you know what I did? And maybe you guys have done this too, is you abandon all of the maybe trades. You abandon all of the maybe trades and you focus on the absolute best of the best. And then you dig yourself out of that hole. Guys, I was up $1,000 yesterday when it was done. And my brother and I were talking this morning. I said, so how do we avoid digging the hole in the first place? And go into the day like you've already dug it, guys. Go into the day with the mindset that you're there. And so, JW, there's a big difference between not finding any trades and being too nervous to get into any trades, right? What markets do you look at, JW? Here's another part of it, ES and CL. Okay. So let's go on the S&P. That one didn't quite fill you, right? Probably didn't catch you. No worries. Those never got your entries. No worries. That was a 50-50. No divergence. Could have taken that one. But that's okay. That one's not perfect. So on the S&P, let's see what that one looks like. I don't know if you were watching the market at 7 in the morning. Area was outside, right? So the S&P today, JW, if you didn't find a trade, I don't think you're in a bad position. Do you guys ever go through at the end of the day and do that and decide? And go back and circle it and see? Andy. So Andy, what's your goal? How far ahead do you have to be to get out? My goal is $250 a contract, guys. That's it. $250 a contract. And then once I reach my goal, I'll trade until I lose one. Not losing is very much winning. But let's go to crude oil. In JW, oops, I'm still calculating. Why weren't you in this trade? Right? Let's see if a fib shows up. But this is what I do, is when I go through a day and I'm like, man, I just couldn't find a trade today. That's when I have to go back and I have to see if I'm talking myself out of trades. And that's where it's easier, right? I have a good top, odds favorable, small smash, no divergence. I love that short. Odds favorable, small smash, large almost through, one divergence. I like this short to get me down to support. It may not fit your rules. But if you scroll back and look, there were probably opportunities and you found a reason not to take them. I know because I did it all the time. So odds favorable, area inside of favorable large triggers, JW, not a clear path, right, brother? It's just not a trade. And look at it bounce. So whenever you don't feel like you catch something, guys, go back and see if there was something that you missed. Because then you'll have a good grasp on whether or not you're talking yourself out of trades or if you are really following the plans. And in the moment, it's tough, right? So let's say that I skipped this one, JW, and I said to myself, I'm not taking that short. I can do it after the fact, and I can say, oh man, but I had a good top. But I had odds favorable. Uh-oh, uh-oh. Man, that's the one to miss, right? And the same is true if you take the trade. So let's say that I took this trade, right? And I just got stopped out. And I go through that simple checklist. That's a good top. And that strong triggers. And that's a termination. And then I see my entry right here, right? And I'm like, oh, and I took that entry. And look at that. It was perfect inside of favorable large triggers. And if I go through and police myself, well, then I can put trade it into a term. And then when I see this, trade it into a term, I go back to my spreadsheet, right? I get the link. And I go back to my spreadsheet and I say, all right, I went through after the emotion was gone. So let me put the link in here, and we'll call it short trade, right? It doesn't matter what you call it here. And what type of trade was it? Well, it was a trend trade. And how did I feel? God, I was jumpy because I knew something wasn't right. And I had a strong top. And my 13-2 triggers were strong. My 5-1 triggers, I already had 2 divergences, right? And I lost my first contract, and I lost my second contract. And then when I went back and did the math, I put traded into a termination condition. And I said, oh, that's probably why I was jumpy. I didn't know it in the moment because, gosh, the adrenaline was there. It was going absolutely nuts. But if I go through this after the fact, when the emotion is gone, what I'm doing is I'm reminding myself that I need to go back and I need to see if the read told me that it was time to take a trade. And if the read didn't tell me it was time to take the trade, well, then I shouldn't have been in the trade. And then when I come back tomorrow and I look at it, I'm going to recognize that pattern. I'm going to say, oh man, I traded into a termination condition. That's not the right thing to do. And all it does is it sets me up at 9 a.m. Tuesday, Wednesday morning saying, today I'm going to try not to trade into termination conditions. Today I'm going to try not to fight triggers. Today I'm going to try not to trade into areas. And you get one step better every day. And Lyle, I just dropped it in there, emotion-free trading. I love that one. Oh my gosh, Lyle, I love everything about this trade. Why do I love everything about this trade? Because the termination reversed the market. This termination was confirmed by 3 higher divergences. And then Lyle, you didn't jump in here hoping that blue fib held. And you didn't jump in here hoping that blue fib held. But you said, check it out. My large triggers are now up. I've got momentum to support it, and I've got everything. Oh, let it start to go in the direction of my trade, and boom. And on this one, you might have even made it up to the next one if you felt so inclined. This is outstanding patience, Lyle. This is one of the hardest things. Wouldn't you guys agree? To be so freaking good at chart reading that you know with this look, it's a potential bottom. Has anyone else ever done that? With this potential look, you're like, oh, it's got to go up from here. Let me jump in right there. Lyle, that was your trade from earlier today. Boink. And it pushes back, and you're like, oh, it's all still wonky, and my triggers are against me. Let me hope this area holds. And you get stopped out again. And then everything gives you a better chance. The momentum finally comes in, right? And it's starting to roll, and you're getting those smalls on the correct side of the large. And let me show you the picture from the plan that I gave you guys earlier. And I believe it was this picture. And Lyle, this is exactly what you did. It came into resistance, and you waited for the triggers to roll. And then it's time to start looking for an opportunity. If this is really going to be a top, those small triggers are going to roll and head the right way. And that's exactly what you did. You were outstandingly patient. And those small triggers finally rolled and got above, started heading that direction, and that's where you capitalized. Nice trade. And I put that link to emotion-free trading right above you. Guys, don't waste your energy being frustrated with not being great at this yet. Confidence comes through repetition. Trust comes through repetition. Consistency comes through repetition. So, when you're repeating something, do your best to repeat the same trade over and over and over again. And I hate to talk about Ron C. when he's not here, but have you guys noticed that 99 out of 100 trades that Ron posts are the exact same looks? There is no deviation. There is no let me change it here, let me change it there. It's this is my rules, this is my trade, this is what I'm going to take. This has been proven to win more than it loses. And if I don't have this situation in front of me, well, then I'm simply not taking a trade. Man, I got a lot of stuff open. Termination creates a full reversal. Full reversal gives me odds favorable momentum. My small triggers are just now getting up through the area. Just now. Which means that if I haven't caught anything yet, it's okay. It's not my trade yet. I don't have a clear path. Bad bottom, mid-band held. Anyone ever seen that one? If you went long here, didn't work out. And now we're back to support. And all the triggers are above and the large are up and the small are down. And guys, there's absolutely no reason to go short into this area with every trigger above. So what am I doing? I'm sitting on my hands and I'm doing nothing. And I'm waiting for that clear path. And guys, once again, bad bottom. There's my mid-band. Large triggers are still down. Sure as hell not going long into that. Every trigger is below resistance. That was 3 markets, 3 chart reads, no rules met, guys. We did it in under 10 seconds, 20 seconds, right? It can be that easy if you allow it to be. I promise. Good day today. This should be a good recording, guys. This might be one to go back and talk about. This might be one to go back. So what leads the way? What do you guys think? If you had to say there's one thing I'm never going to trade without, what do you suppose? I would pick momentum. I would pick momentum, guys. The core of everything we do. I mean, the core of everything that we do revolves around momentum. And the better the momentum, the more likely the market is likely to push. And then once I have that momentum, no, Joel, that costs extra. Just not into that. Once I have momentum, well, then I'm speaking to myself in terms of what's my path look like, right? What's my path look like? Are all my triggers below? They are. Well, hell, maybe I shouldn't go long yet, no matter what I want. No, Joel, you're fine. It is frustrating. You guys ever see the scene where Rocky chases the chicken? And Rocky is like, oh, come on, chicken. And man, he's going after that thing. Well, that shows the one where he actually catches it. But if you get the one where he doesn't catch it, you see him going frantic, chasing all over the place, right? How are you going to be successful if you're all over the place? Stop giving yourself so many things to look for. Keep it simple. Keep it focused. I promise it's easy. We make it hard on ourselves. So ask yourself, what is my best trade? There you go, Cav. Termination starts to reverse. Fibonacci resistance, mid-band, large triggers down, divergence, synthetic down. You take a pullback to the large triggers and it bounces up. Good stuff. It's the same look here though, isn't it? Didn't work. I love it when you guys get paid. It makes me happy. I really do. But I don't want you just to get paid today. I want you to get paid every day. I want you to get paid at every twist and turn. I want you to get paid consistently for the rest of your life. It's okay to not be in every move. How many trades do you guys take a day? When I overtrade, I take 20 plus. When I hit my goal easily, 5 to 7. 5 to 7 on the NASDAQ, on a market that produces an outstanding number of opportunities. That's my stress-free day. 5 to 7 trades, best of the best. Joel, termination, reversal, in at the top. Why is your stop so far down, Joel? As you trade into trouble. Why are you risking $240 on a medium probability trade? And you can. I certainly don't mind. You do you. All right. I protect myself ASAFP. I love your entry. No divergence, 50-50, perfect area, inside of the triggers. And it gave you a reversal bar to say, hey, Joel, let's tighten up as much as we can. And then, Joel, what do your rules say about divergence on a 50-50? Absolutely. You'll be here in the morning. God's not done with you. You got things to do, Cav. And Joel, you do whatever you want to do, but what's the management for a 50-50 trade for you guys? It's not the same as a high probability trend trade. So you have to ask yourself, if I get divergence, do I stay in the trade? If I get divergence, do I continue to risk on the trade? If I get divergence, do I hold and do I keep my stop way below my synthetics? And only you can answer that. But by knowing what type of trade you're in, doesn't it give you the opportunity to manage appropriately? Pretty cool, right? Stop, Joel. Does everybody have rules for entry? This is how we're going to end it today. Does everybody have rules for entry? Raise your hand if you have rules for entry. Help me out. If you do, it's cool. Do you have concrete rules for entry? Joel, you're full of shit, Joel. You do have rules for entry. I've seen it posted on your charts every time. I didn't ask you if you follow rules for entry. Do you have rules for entry? And since nobody's playing, it doesn't matter. But do you have rules for exiting? Man, I hope you have fun on vacation. Everybody has rules for entry, guys. That's the easy part. Do you have rules for exiting? That's where most people say no. Most people say, no, Mark, I don't have concrete rules for exiting. I just leave it to my gut. I just wait to see what the market's doing. So you got to have both sides of the coin, guys. But start with the entries. Let the entries be great. Just because you're good at entries, eventually, no job, I know, right? And just relax. Did you quit? Did you retire? Or is this just for vacation? Man, it's okay to not trade on vacation. It's okay to not study on vacation. I mean, you can if you want. When I go on vacation, my laptop stays at home. I focus on vacation. So that's just me, though. Next week is almost a vacation. I do too. I get excited on Sunday night because I know I get to do this on Monday, which is a good thing. Well, that's a decision only you can make, Joel. That's a decision only you can make. If I quit everything that was hard, I wouldn't be doing anything because everything's hard in the beginning. So, isn't that crazy? I'm the same way, Andy. I'm the exact same way. So, guys, go enjoy your day. I'll post the, I'll publish. Well, then, Joel, take a break, brother. Back when I was a mechanic, if I couldn't get a piece to do what the piece was supposed to do, maybe I'm rebuilding an engine and I can't get a camshaft in right, I'd walk away. I'd go have lunch. I'd stop looking at it for a minute and let my brain clear. So if you're frustrated, guys, you're not going to trade better because you're frustrated. Nobody ever said, man, I am so freaking wound